And welcome out to our show here today, Tackle Trading's halftime report. It's Tuesday, 4/21/2020. Got a full crew here. We've got Noah, we've got Mark, myself, Tim, and as always, Cody on the back end producing and running the show, which we appreciate you coming back, Cody. The last couple of weeks have been much smoother than when you were gone. We couldn't get it live. We couldn't name it right. It's great to have you, kiddo. Let's start right with oil here, guys. And Cody, that was a compliment. You can
I
come.
appreciate that. Thank you so much.
Yeah, you are very much appreciated. S&P 500 is down here. Let's just start with the broad market in terms of the context. Give me the daily chart if you can. Obviously, there's a lot going on across markets. I want to quickly get into crude oil analysis, but we do have the first substantial two red candles in a row now in the first time in a month, guys. I mean, the market hit a low there on 319. Here's a simple question. Is this the start of more selling, Mark? Do you see this pivot as confirming something? Is it too early to tell? Mark, what's your read on the markets first?
Well, all of those individuals that were texting me, calling me, emailing me saying, is it the time to buy, are now selling. Is it the time to sell? And USO just halted share pricing as it dipped to 250. So that was just barely happened right now.
Yeah, it literally happened. I'm sitting there looking at contracts, and all of a sudden
we'll come back to stocks. Give me oil if you can. It's the biggest story of the day.
USO. Absolutely, it is.
Yeah, let's come back to stocks and start with the crude light actual contracts. Then we'll get into the USO discussion. Let's just start with this. We did a podcast on this yesterday. Noah and Mark, you were both there. We had conversations. By the way, tradingjustice.com, go and read that. It was actually about oil contango and the negative prices that we were seeing. There was a question that we posed, and I think Matt asked us all, do you think we're going to see negative prices in June? Mark, you said yes. Noah, you said maybe. And I think I said maybe as well. Nobody thought it was going to happen this quick as what we're looking at. Now, we're not negative yet, but we're down 45% on the June contract here. Mark, give us context. What is going on with the oil markets today?
All right. So this is what's happening. Don't listen to CNBC. Don't listen to anyone. The storage issue that we've been talking about for weeks when it comes to oil is much, much worse than we even thought it was. There's no place to put oil. I mean, that's what the price action in oil yesterday. We saw at one point, what was it, negative $40 a barrel. Could be technically exacerbated. Algo's driving down as part of it. There's no doubt. But the plain and simple fact is there was no bid. There's no place left to put oil. Plain and simple. It's worse than we thought. We'd heard figures like 70%, this, that. There's obviously that is was being very conservative and generous and was very, oh, isn't everything great? There's just no place to put it. And the lack of storage capacity is creating this massive effect on prices because oil companies, hey, everyone's been debating Saudi Arabia, Russia will cut. Everybody's been too slow to the game. The supply demand balance has been out of whack on way more supply than demand's being used. Now that happens for periods of time and oil doesn't crash, right? Supply can be out of whack for long periods of time and oil will slip, but it doesn't crash. What causes the crash is that when that supply demand is out of whack and there's now no place to put it, well, it creates a price mechanism that just blows up the market. We knew the storage, and this is where I have gotten the storage issue wrong. I thought we had time to play this out a little bit. If we had 70% capacity, rig counts were falling by hundreds over the last couple of months. The OPEC plus finally said, hey, we got to do something. And I thought there was a little more time to play out the storage issue. Obviously, that storage issue is first and foremost today. And so individuals in the markets right now are like, if there's no place to put oil, well, what's going to happen on that June contract? And so you've went from are negative prices in oil possible to a widespread panic that not only are they possible, but likely. And you have a front-running effect. Not waiting for May to occur, right? That day of or last day of expiration. Not waiting for that to occur. People saying, shoot. And it's on, and it's created it's created true panic. You want to see what true panic looks like in a market? Well, this is what true panic looks like.
Well, and let me make one comment about that, because I saw some pretty disturbing commentary from so-called leadership in this country cheering on lower crude prices. And guys, the number of jobs, the number of people dependent on this industry is the number one commodity in the world. Maybe you should get some education before you start, throwing people under the bus in an industry that is vital. So there is panic. There's panic in workers. There's panic on the street. And Cody, I won't mention who that was. You and I can talk politics after.
No, it was
and
AOC.
It was.
I would just raise an eyebrow, because when Trump does something, you call him out directly. AOC does something stupid, and you say one of the leadership.
It wasn't
So
just
I'm
her.
calling you out now. It was AOC who said a stupid thing.
Once again,
What she said was disgusting.
This is what happens when former bartenders run their mouth in front of a camera. Like, you cannot have the oil and gas industry collapse and not have massive economic damage to the entire economy. That is, you can't have it happen. Hey, low oil prices. Hey, we all love that, few extra cents, on our gallon of gas, right? We hate it when oil prices explode. But the economy itself is too fragile.
People cheering for lower gas prices, it's not a good thing for the economy. Here's a great example that you can remember for your entire life. Low oil prices and low gas prices are a reflection of terrible economic health in the country. It is the number one commodity in the world. And at $11 a barrel on the June contract, I mean, obviously we are seeing a historic crash, even as much as we were seeing here months ago, Mark, and this supply issue is not going away. The July contract holding at 20, August at 24, September at 25. And obviously here, I mean, Noah, what's your read on this situation? Because it's historic, it's extreme, it's disturbing, all kinds of things that can come to mind. But what's your read on it?
Well, I mean, the contango is significant. And so what that does is that exacerbates storage issues. People aren't going to want to, like, if you've got an oil tanker sitting off the coast of wherever waiting to deliver its oil, are you going to try to deliver it now, or are you going to try and wait until you get a higher price? So the oil tankers will get parked. The capacity issue is not solved. Nobody wants to take delivery. I think the contango is a big deal here. And just the difference between the pricing on that contango it's now, I believe, what they actually call a super contango, which is a pretty big deal, because a lot of the funds like the USO run those contracts, and they typically roll those contracts from 1 month to the next. And so that means that they are buying high and selling low. And that's not good. And I don't know what percent of the futures contracts like the USO holds, but if they just halted trading on the USO, I mean, obviously that's a problem. And that's, I think, if the contango lasts, that's an unsustainable scenario.
Mm-hmm. Mm-hmm. I'm concerned about USO, and that's a very light way to say. Let's talk about it. USO is the biggest ETF in the oil markets in the world. It's supposed to not use leverage, Mark. Do we know? There's three questions I have for you. Do we know, number one, that it does not use leverage? That's one. Number two, how much of this contango risk affects this ETF? And I do not want to feed into fear here at all, guys, but can the ETF actually dissolve in the face of this historic pricing?
100%. The possibility what we saw yesterday in negative pricing. So here's the scenario where USO dissolves, is that market participants became aware that oil can go to not only zero but negative. Huge reality check. And I'm not talking just individuals. I'm talking advanced traders that have been around 20 years, right? Mm-hmm. Like, always having this fundamental belief that commodities can't go to zero. Well, there was a paradigm shift yesterday. All right. This has caused the panic selling in the June contracts. That what happened yesterday on the May oil contracts will likely assume, and it creates this huge front-running panic. Now how USO operates, and they're changing on the fly, and if you are betting on USO, you're betting on a couple things right now, because USO is either going to be the greatest time to get into oil ever, or you're going to lose all your money. It's going to be one of the two. Okay, so what we already know is that USO, and let me pull up my notes here. Hold on one second. No, I mean, cold. Is that, let me see this.
First off, did you just shoo her off?
I totally just shooed her off.
I mean, she's the best part of your household. At some point, you can put her on that video and we can actually hear some insight from her. But yeah, no, I saw that.
No, so what we know already is that they already preemptively have rolled 20% of their contracts into the July contracts.
How do we know that?
They've disclosed it.
Okay.
We already know that they have bought government debt and other things. So the fund is not entirely made up of the June contract. Now, we don't know what they've been doing the last day or two. We do not know what they've done the last day or two. Maybe they're rolling out more as we speak. Maybe they're diversifying more into those future contracts. We don't know that. Pure speculation if it is. But if June goes negative in the next week, if this front-running effect on oil makes those June contracts go negative, you could see USO dissolve, because depending on how much they're weighted on the June contracts in correlation with the negative prices, what we saw yesterday, to say that they couldn't go to zero and dissolve, you're ignoring what you saw yesterday.
Yeah, but our job is probability analysis. So what is the likelihood of that? I mean, if you had to put a percentage in your mind on it, and or even a rough range, or even just a vague answer, or some answer, but do you think that's likely, unlikely? Do you think it's got a 10% chance of happening? If they don't fix this problem in the next 14 days, Mark, and June goes negative,
well, here's the things that can cause a spike in oil, right? Emergency meeting by OPEC Plus saying we're slashing by gazillions of barrels. Right now, as we speak, the Texas Railroad Commission is meeting to hear about potentially curtailing statewide oil production, which would be the first time to the 70s. Some emergency tariff. Now, Trump has this front and center on his mind right now. He's tweeting about oil. This is the headline story that's impacting everywhere. And we can talk about equity traders here in a minute, how the reality of, things can go down in price affects their sentiment. So there's lots of potential bullish catalysts that can spark oil. Now, we might look at those as exit potential opportunities if and when they do occur. But that storage issue is the one that is it's like everyone woke up to it yesterday. And to ignore the possibility that those June contracts get in a panic selling mode where oil goes negative far before the day of or the day before the Mays did. I mean, that's just a real possibility. I mean, if you put gun to my head, does USO dissolve? Well, I mean, I sold 350-cent puts on it before the show, so I'm betting that it doesn't. But once again, the money doesn't matter. I mean, if I lose what's that, $120? If I lose
position sizing 101 right there. I mean,
but I am when I sold those 3 puts, I was like, I might lose $120. And you can get even more for them now. I mean, what are those 50-cent contracts selling for on USO?
About 15 cents.
Yeah, I mean, so like per contract, you can lose $35. And what you're really betting on is a series of events: Texas Railroad Commission, OPEC Plus, Trump himself, the management team of USO properly rolling those contracts out prematurely, that oil doesn't go negative in the next 7 days. So, I mean, you're placing bets on Um, but that's what they are. They're bets, because there's a possibility of total loss in this scenario if oil panics. I'm still willing to make those bets, but I'm also realize that, the money I have in USO right now, I'm glad I'm only nibbling. Let's just say that today.
Well, here's the thing. This whole thing just smells very, very fishy. I'm seeing a lot of information that's mixed about what USO actually does, when and how they decide when to roll their contracts. If they bring in trader discretion, Mark, that means they could have had trader discretion over the last couple of days and completely screwed this up. There's so much we do not know. What
absolutely.
The composition of their fund is today. I mean, we don't know that right now. I'm very concerned about USO here. Obviously, I mean, that's saying it very lightly. And talking about something down 30% here, curbing and halting trading. Noah, what are you willing to do with this one at all? Crude oil, are you completely staying away from it? Are you thinking a naked put works at some point? Do oil companies grab your attention at some point? Mark, the best plays might actually be the solvent companies that can come out of this thing in years, the Exxon Mobils and those types as well. Noah, you're on mute, but come on in here and give me some thoughts on this.
Well, I would rather speculate on a company like Exxon Mobil or Chevron than the U.S. oil fund, because from what I've been reading and studying, I think part of their issue is that they were in the process of transitioning ownership from one bank to another, or one clearing firm to another, is what I was reading on this Forbes article. And the problem with the futures based ETFs or ETNs is that if you get into a contango situation, it becomes an unsustainable model. It works until it doesn't, basically, is what the article said. And it could go the way of like the XIV, which was an ETF or ETN, excuse me, on the volatility index. And it was doing the same thing, where it was holding futures contracts and rolling them each month. And so if you get into a contango situation that becomes prolonged, it doesn't work. It forces that fund to buy high, sell low over and over and over again. And so the big question in my mind is watching those futures prices. And again, short of trading the futures themselves, which a lot of traders, the leverage on the futures is pretty big. Excuse me, I meant to put in the CL. Mm-hmm. But when you look at those contracts, and you can see that future pricing out there, that just exacerbates the storage problem, because nobody wants to take delivery on that. So I think the reason you went negative, and I've been trying to wrap my head around how that went negative, and that kind of altered my belief in how markets function for a moment.
It's never done that before, right?
Never seen that. Not that I've ever seen.
I know I've never seen it, but I don't think it's ever been historically.
I was trying to wrap my head around it. That literally means that producers were trying to pay people to take it off their hands. Like, you literally, they couldn't get anybody to store it, so we'll pay you rather than have to eat it the other way. So, that creates just an interesting situation. And unless we see consumption all of a sudden spike, how do you get rid of the storage problem without consuming it? You can't dump it. That's the problem with oil, is it's toxic and it's not environmentally friendly. So you have to keep it in a storage place, someplace nice. You can't just dump it back.
Here, I'm going to share my screen. Let me share my screen real quick.
Mm-hmm.
But
the composition of the fund itself is what matters here. And can you see my screen? All right. So as of 4:20 yesterday, subject to change up here. Do you see that little subject to change?
Mm-hmm.
That's what we don't know. I mean, one of the things that you could exacerbate a sell-off on any given front month, i.e. the June contracts, is USO rolling those today? Like, as a holder of USO, please be rolling those. Roll those out as far as you want, to avoid the contango situation that Noah talked about. But we see that they already hold July's a disproportionate propensity, which is why oil prices in the June going negative in the next 7 days would be disastrous to USO. But you also see that they own a lot of treasury bills in this fund, like a lot. Mm-hmm. They have good old-fashioned cash in the fund. Some other miscellaneous odds and ends, $1 billion here, $1 billion there, or something else.
So that is 1.5 billion in cash. Am I reading that right?
I'm reading that right.
And and then the other ones are also cash as well. So they've got about 4 billion in cash. Those treasuries, I mean, that's 25 million a piece. Do we have a total on that?
It's a big number.
Big number, several billion, right? It looks like.
And so the composition of the fund is critical here, is absolutely critical here to avoid the nightmare scenario. As long as they navigate away at a higher degree, now we see that they already did this with the Julys. They're already forward thinking. They're not oblivious to the situation. But once again, if prices go to negative $10 on those June contracts, it would probably dissolve the fund because like that's
this contango risk could fold this thing under, but I don't think it's the probability that it will go under, by the way. Don't you think? Even yesterday was historic. You're at the end of it. There's no options on that. Firms can't hedge it, all that kind of stuff. But don't you think the probability, the very, very high probability is USO somehow makes it out of this, even at a very low price? But bankruptcy is a potential outcome. We just don't know exactly what that probability percentage is.
Yeah,
Mark, do you agree with that? No, I don't think you agree with that, by the way. It sounds like you're in the camp that this thing is.
Well, I'm legitimately concerned because I think what you're going to end up seeing, this is just a speculation on my part, you're going to see government subsidies to oil companies not to pump. They're going to pay them not to pump, just like they pay farmers not to farm.
But even if that happens, does that?
But that's bullish. That's bullish.
That's bullish for oil, but not for the USO.
For
Why
June.
not? I mean,
because they don't. No, they're talking about bailing out the industry, not the fund that holds that USO.
But if they pump people, it all comes down to supply, demand, storage dynamics right now.
Right. So if they can effectively curtail pumping, and a lot of times you got to consider like it might be more expensive for the oil company to shut the pump off than it is to keep it running. So it's one of those things where if they get, you're going to see those subsidies probably pop in, and then it's a question of timing, like how long until they can open up storage capacity again. How quickly can we consume?
We're going to keep talking about this for a few minutes, so I'm not trying to shortcut anybody, but I do have some questions coming in here. And Cody, being a man of the people, Cody's like, Tim, we got good questions.
If nothing else, right, things are interesting right now.
Oh boy, do we live in interesting times.
I mean, we were
Well, here's a question for you. What are the titles or the names of the movies that they're going to make about this story?
Well, it depends on what the end of the story is, I guess.
I guess so.
Conflict has been started by oil wars in the past. I hope we do not move towards steps like that. Let's read them here, Mark. Let me make sure that we got it. Steven says, does this mean that there is not much value in the mid-term 6 to 12 months to USO? I think we've been talking about that for a bit, but I think if you can get through this period, Mark, I think USO most likely can survive.
What's funny, to steal a term that we're all accustomed to, USO is either a great cash flow upside investment or it's a total lose all your money. It all depends on how the curve is flattened on the bottom side.
They got to flatten this curve.
It all depends if they can get through
the contango.
It's not just the contango. We're talking survival. We're not talking about upside here. We're talking about survival, which when you're looking at those 50-cent contracts is all you care about, right?
Mm-hmm.
Like when you look at $1.50 contracts and those, that's what you're betting on. You're betting on survival, flattening it out, having supply and demand equal, having massive cuts in the oil industry, having demand pick up a little bit, having USO being able to survive a potential negative oil pricing in the front month contract until they can restructure the ETF to be more forward contract. So there's all of these massive things going on right now.
No, screen share real quick. Let's look at USO while we're answering these questions. And by the way, welcome out to our show here today. I know we've got a serious tone because these are serious times, Cody. It's the reality of it. I mean, we're dealing with market volatility. Oil markets are crashing right now and all that kind of stuff. But as always, we're here for you guys as a community. We come in here just to share our insight, our analysis, and our thoughts. If you enjoy our show each and every day, always give me a thumbs up. It helps our analytics and new subscribers. Cody, I think we picked up a couple hundred new subscribers last week, right?
Last week, we picked up 233 subscribers in 1 week alone, which is awesome, guys. Thank you. Keep sharing the message. Keep getting it out there because obviously, I mean, something like this happens. You guys come to us to ask like, hey, I don't trade oil, but what does this mean for the market? And
Mhm.
and asking questions like that, that's what we're here to answer. And that is actually one of the questions in the chat. So
Yeah.
let me pass that one off. Is
Like
people who don't trade oil,
my
why
phone's
they-
lit up a little bit. Like I've had a lot of people text me like fear of missing out and fear of genuine fear of holding the instrument. What do I do? How do I profit? Like a lot of people want to figure out how to get the oil for free and see if they can profit from this.
Sure.
Right,
Yeah.
sure. And that's what the oil thesis is all about. This curve will flatten. 100% will USO survive, or are other oil instruments, i.e. stocks themselves, a better play to take advantage of what inevitable? Because I will say with 100%, the supply demand storage thing will resolve itself.
Yeah. Oil will
I'm
be a
100%.
commodity we use for a long time, for sure.
And once again, to reiterate an argument I've been making for weeks, the storage issue forces the issue. If oil and it's even more exacerbated and more pronounced, and everyone's aware of it right now, which is causing panic in the oil markets right now.
Mhm.
If there's no place to put it in negative prices, things will get shut down. We've already seen those trends. Eventually, it will flatten. Eventually, supply and demand will reach an equilibrium. You might even see supply underneath demand to start to lessen the capacity on storage. That is a mathematical equation that will happen. How do you take advantage of that? That is the big question. There is
Well,
risk on
but
those
the
two.
outcome of that is we don't know what the price of a barrel is.
Yeah,
right?
we don't know what price that
I mean, yes, when equilibrium gets hit, demand and supply meet each other. At some point, the economics of it will stabilize these markets, and we will have oil in the future. But we don't know if that's at $15 oil or 10 or 25 or 35, right? I mean, we don't really know what the price will be moving forward past that.
No. So it's all a question of how do you want to play this inevitable? Sit on your hands, be patient. Well, that advice can be applied to all things, right? Equities, anything that's not named gold, right?
Mhm.
I mean, gold's the one certainty we know how this plays out. Government prints a lot of money. Gold has a really good time,
Mhm.
you know? And so gold at lower puts is why I like those so much. But I mean, the diversification, I mean, it's seriously, USO, am I going to bet on USO surviving? I'm putting my money where my mouth is. You know, I'm putting my money where my mouth is. But to acknowledge that it's a certainty that it will survive, well, you also need to allocate those gambling dollars where appropriate.
Mhm.
You know, I talked my brother Tim into selling a 50-cent USO put.
It was a token gesture. No, I
was a
had to throw
token-
him a bone. I had to, because we've been arguing about this for a month and a half. So I
And so
finally
he's-
had to say, all right.
So I got Tim to risk
'Cause
$40.
the probability analysis of the 50-cent strike, in my opinion, is worth the risk. And as traders, aren't we really in reward, risk, and probability analysis?
Yeah.
It's the biggest oil ETF in the world. Do I think it has some potential of going under? Of course, that's why I've been talking about it for half an hour. But here's the skinny. We don't know. And so you got to look at numbers, Noah. You know, it's just like doing a bull put or naked put on anything. I mean, you get a pretty good credit down here today because you're selling off of the fear, Mark, is what it comes down to, right?
Yeah, volatility is what, like a gazillion, bazillion
gotta
percent
be.
on
Yeah.
on oil right now.
Yeah.
It's massively high. But I mean, the two reasons, and then we'll move on to equities, and we're going to talk about oil more on the Coach's Show tonight and how it impacts equity markets, oil itself, field questions from our pro members. So we're going to talk about oil tonight. Noah, do you want to join me and Tyler on the show tonight?
I would love to join you and Tyler on the show
Oh,
tonight. I feel important and special just being invited.
You know, like, so, I mean, we're going to have, like, you know, usually we only have two coaches on the Coach's Show. We're going to invite everybody. I'm going to invite Gino. I'm going to invite Tim. I'm going to invite everybody. We're going to have a big round robin Coach's Show tonight.
Your invite just became less important, Noah.
Aw.
But I invited
everyone.
you. But I
Party at the
invited you
Moon
first.
Tower. Party
you're
at the
not
Moon Tower.
special.
All right. All right. More questions here. I got to get to them. Adi Puplampu out there in Wisconsin. Adi, good to see you. What is trader discretion, please? And I think when Mark was talking about how much of the fund was held in June versus July, the question I still do not have an answer to, and I don't know if we know, Mark,
We don't.
is how are they deciding when to roll those contracts?
They could be rolling those contracts today. We
Yep.
don't know. They
We
could
don't
be
know.
setting what we do know, and this is what gives me a little faith, is that they already rolled about 20% of the contracts 2 months out. That's abnormal. That is, for me, as a looker at the fund, saying, well, they're aware of the situation. They're trying to do something preemptively, but are they doing any more today? We have zero idea. We have zero idea.
And
so
I don't know what their corporate governance restricts them from doing too. I mean, do they have to hold a certain number of this and that and the other thing? We don't know, do we? I don't know. I don't know that. But that's what he's talking about, Adi, is when they roll from June to July and things like that, we have to watch those daily totals move. It's going to be fascinating. Jasmine says, pay someone to take oil, LOL. It doesn't mean that you're going to get the oil delivered to your house, by the way. I saw some stuff.
Yeah, I cleaned out my garage and everything, just getting ready for it. And the guy at the gas station didn't seem to understand what I was talking about when I said it was free. So
yeah, they will not let you take it. FX signals, we talk about those a little bit, Larika. Today, it's all about oil, quite frankly, in markets. We'll get into the dollar here in just a minute. What is happening in the background when oil is now in the headlines? That's stock market. We'll talk here in a second. Yeah, let's go on to stocks. I'm getting a few questions like that. What is the effect of oil on stocks? Go back to the S&P here for a minute. And by the way, you know, these big picture themes, there's a lot of individual stories we're going to get to by the end of the show, but the big picture themes are everything. Do you think oil can end up shocking this stock market rally and flipping the bears into control?
Mark? That's been my big, oh, sorry, go ahead, Mark.
No, first.
Well, I was just going to say, that's been my big question. Like, is this big enough of a deal that it causes equities to sell off? That's just been, and today's shows that, you know, certainly we're seeing some selling pressure, but I don't think the bears are in control yet.
Here's a big picture question from Dustin. I'm OCD with the questions, Cody. When you put me on questions, I'm like a bloodhound. I'm going to find them all in the chat. We're going to go through all of them.
Yeah, I just saw them coming through, and they were good questions. You know, how does it affect the big market? You know, how does it affect the dollar? What does this mean moving forward? Those are all fantastic questions.
I've got some other ones right here. XLE. What's the effect USO has on XLE? And Mark, obviously people, whenever they hear energy, oil, they're going to connect the companies and the commodity together. XLE is only down 2% here today. Mark, what's your read on the oil companies?
All right, it's pretty simple. All right, we know governments are going to come help. Now, from an oil perspective, what is the form of the help? Is it a tariff? Is it a pay to not pump? Both of those really bullish for oil itself. Is it simply giving them direct money? Now, if it is simply giving them direct money with no curbs on production, well, that doesn't help oil prices themselves at all. But it does help any of those three. So 2 out of the 3 help oil prices. 3 out of the 3 provide that feed into the survive, maybe not thrive. Think if oil companies are directly given money, or if there's tariffs, or if they're paid not to pump, this makes equities look more attractive as an oil play, trying to find the bottom, trying to do take advantage of what will eventually be supply-demand equilibrium. And so for an individual that said, screw it, I'm going to take my loss on USO and I'm going to go take those and sell naked puts on XLE, energy, whatever it may be, that is a logical, rational line of thought, because 3 out of the 3 measures the government can take to assist oil help energy companies. Only 2 out of the 3 help oil itself.
Okay, I'm gonna make a statement. You guys tell me if this is a good idea or not. I'm gonna buy some shares of ExxonMobil and give it to my kids so they can hold it for their entire life.
I like the idea. They pay a
XLE?
dividend. Question is how big? XLE. I mean,
what about XLE itself? Why not XLE instead? I mean, what are we looking on?
ExxonMobil has political favor. They have better access to markets. They're the biggest. They pay the most consistent dividend. My kids are little, 7 and 10. So seems like just a big player that will be around forever.
All right, let's take another route. Let's say you've lost $100 on a naked put. Let's think strategic. I've started to pace, Noah. So
Before we go down
Pricing.
that thinking though, I'll let you explore that, but I do want to get to some questions before I miss them. What does this mean for the petrodollar? Does this threaten the petrodollar going forward? Dustin, that question concerns me in many ways. I don't know the answer to that, Noah. I'm trying to wrap my head around what this means for politics and everything.
That's a good question, because the petrodollar is really the express advantage that the U.S. has in the global oil trade. I mean, the fact that 10 years ago, 15 years ago, the vast majority of oil transactions required the US dollar. We've lost that dominance. We're down probably 50%, I think, somewhere in that ballpark of global oil transactions involving the US dollar. And US becoming the top producer in oil, that's been a huge boom to the economy. And so, this is just really interesting to see how this plays out. Because, if we go back to, shutting down pumps, curbing production, we no longer have the pole position in global production. That does, I think, cast some shadow of doubt over the petrodollar, like whether or not that stays as the U.S. as the world reserve, currency status. I think that gives a lot of the currency speculators out there who are thinking that, I've read too many books about the death of currencies and the things of that nature, to not make my head start processing, what could happen, what could be replacement currency, et cetera, et cetera. These are big questions, and I honestly don't think anybody knows the answer.
It is
speculate on them.
Yeah. Cody,
Bank of America just raised their price target on gold to $3,000.
flip your mic back down. When you were pacing, you might have moved it.
Oh.
Did you? Yeah.
Bank of America just raised their price target on gold to $3,000.
All right.
We're going to talk gold in a minute. We might have a long show here. Back on XLE for just a minute. I got a question. There were several things that came out from policy. You guys are hinting at government actions and all this kind of stuff. Number one is there was talk about Trump on Twitter saying, hey, listen, we're going to defend our oil and gas industry. It's very critical for the nation and all this kind of stuff. And he's 100% right about that. Did the program they already pass earmark money for oil companies, or has it already been designated? Can they do that within the current operative from that program, or will they have to pass a new bill through Congress?
I don't know. Let's see if the CARES Act has oil allocation.
Because I know oil companies were lobbying the Fed to change the CARES Act, Mark, because the Fed lending institutions do not apply to oil companies because of their bond status. That's a problem. Many companies do not get access to those funds. So is Congress going to pass it? And is there risk there will be gridlock politically on this issue, Mark? Or do you think it would just get through?
Dude, I don't know.
Me neither.
Like here's the thing is how much discretion, because so many things come down to discretion. The word of the day today is discretion. How much discretion does USO have to roll out contracts? How much discretion does the Treasury and the Fed have to just give oil companies money without congressional approval? I don't know how much discretion they have. If they have a lot of discretion, well, Mnuchin is going to follow Trump's lead and oil companies are going to get a whole huge pile of cash. If they do not have the discretion to do that, and remember, a lot of the Fed fund lending is behind closed doors. We don't even know. One thing I do know is oil markets. Why isn't XLE down big today? Why isn't XOM down big today? Because everybody knows this is a front end problem in the long grand scheme of things. Eventually supply demand is forced to rebalance. How does that affect USO on that front end contract? I mean, that's the big question. But as far as the big picture of oil, everybody is of the belief in the oil community that eventually this balances, takes care of itself. And so you're not seeing panic. I mean, my goodness, XLE is down less than the market, isn't it? Is that true?
It's probably about the same, but relative strength here today. Next question is, there's a lot of hinting at this import ban on Saudi Arabia. I'm going to put you guys on the spot. Do you actually think Trump would follow through on that? Do you think that's going to happen? Do you think we're going to see an import ban on oil?
Well, did did you think that immigration was going to get closed off yesterday? Like, I mean,
We just become isolationists.
Yeah, we know for sure. And by the way, from a public health perspective, I mean, of course, you need to have some policies that restrict the risk right now in the world that we live in. There's no question. But we're talking about Saudi Arabia here, guys. We have a 50-year relationship with that nation, especially specifically with their oil and how they sell it and why they sell it and all that kind of
does
stuff.
Russia start blowing up Saudi Arabia and oil fields? Like, this is the kind of thing that starts wars, right? Like, let's be real about it.
If goods and services don't cross borders, armies might.
Like, this is historically speaking, resources have been one of the major catalysts to international conflict. Now, you're kind of reversing your head here. It's oil prices. But do you think for a second Russian sovereignty, if it is in question, they're just going to let it happen?
Yeah.
Hey, listen, supply demand will be settled one way or another.
This oil conversation is the most important story in the market here this week. Might be the more important than stock prices themselves, by the way. We look at the stock market, we look at XLE, we look at all this kind of stuff. Guys, oil in the short term is a better reflection of the raw economic impact of what's going on right now. There's no question. We have a demand shock, we have a supply excess, and we have uncertainty in the short term. And I think that we all kind of aware of that. Long term.
And I just want to say one thing, and let's turn to equities after this. If you're freaking out about a naked put on USO, and you're like, but you still want to take advantage of an oil thesis, taking the loss on USO, rolling them over to XLE, not the worst idea. Now, we can always take losses. You should always be prudent in your money management. I mean, when things are getting on, these are when we are prone to make impulsive decisions. That is an option for an individual that wants to still play oil, buy back those naked puts on USO if you don't want to take the risk. Now, I'm willing to gamble a little bit here. I am. I like a lot of the potential bullish catalysts, but I also know it could get wiped out, right? So some individuals don't have that level of risk tolerance in this situation. Rolling those naked puts over to XLE to play oil, to play all three of the potential bullish catalysts might be something to consider for an individual that wants to diversify risk out of USO, but still maintain that allocation in their portfolio that's oil related.
And do you believe XLE is a better bet than individual companies? Whether it's BP or Exxon or Chevron or any of them? Do you think it's smarter to play XLE directly?
XLE is really liquid, right? It's top heavy. So because I know that you buy in the top heavy argument of oil, that they're the ones that most likely to get the money in that. So you look at the holdings of XLE, what is it? 50% Chevron and Exxon.
Well, they can just last, can't they?
I just had them up here. Let me bring them back up.
And so XLE is
23% in Chevron, 23% in Exxon.
And so, you're almost 50% on the two big ones anyways. And then, a little diversified here and there everywhere else. And so you're taking off, that massive who wins the political battle of free cash, right? Like whose lobbyists are better, Chevron's or ExxonMobil or Phillips 66. And so you're getting a little diversified play. Obviously, risk associated with anything, but once again, I'm talking to oil individuals who believe in the supply demand eventually gets rebalanced, forces the issue. It might be, rolling if you just can't sleep at night because you hate the risk associated, pull up the trade tab on XLE, you see some price levels for those May contracts. Like your average, as a seller of $3 naked puts on USO, you're looking at, what is it? Probably $1.10 loss per contract. Rolling those over to XLE, you can get $1.10, sell that credit, be willing to take ownership of XLE in the mid to high 20s. Something to consider for individuals that aren't willing to gamble on the USO short-term, really scary situation. And every day we're going to have more and more information, right? You don't think the first thing I do every morning is going to check the current holdings of USO
You have to. I mean, I'm fascinated now. I want to know how many contracts they rolled today based on those holdings. I mean, that is important information. We need to bring that to the halftime show every day, Mark, and talk about what they're doing and examine it on the ground day by day by day, because obviously USO has been a longstanding commodity. It's the number one oil ETF in the marketplace. It's going to be critical to keep watching. And I do think there's some prudence in going to the companies if you're interested in that route as well. But more to play out here. We got to move on from oil here today, though. Back on the market here real quick, Noah. I just want to point out one technical thing here on the S&P 500, if you can. We're down at 2730. But this is the first two red day candle. I mean, if you're a bull and you are still bullish on stocks, you still have higher pivot high, higher pivot low, don't you? And you have rising MAs. There's an old resistance point around that 2640 mark. Noah, is this just a pullback? Could we just look back at this at some point and say, hey, little hesitation, nice little pullback, we needed this?
Could be. I mean, it looks at this point in time, looks like a typical pullback. I wouldn't be surprised if it dropped down to that 2640, 2650 ballpark, rising 20 period moving average. And you saw some buy the dippers come in and start to run it up. The big question is, if I see increased volume in the selling or increased momentum in the selling, if those candles get, today's candle or tomorrow's candle get bigger or scarier, hairier, so to speak. But in the meantime, it could just be a little pullback for a couple of days, and then it's off to the bulls are back in control.
Mm-hmm. I'm a bear. I'm Timmy the Bear recently, not long term, but at least here in the near term. The reality is, though, calling victory, Mark, before you're even below some of these key moving averages is premature for the Bears. They can't be dancing on their desk yet, right?
Dude, this is a long game.
Long game.
This is a long game. The only thing surprising from the last 2 weeks has been that the Bears didn't win back-to-back days. That was the only thing that shocked me. And that's how in control the Bulls were, is that like you almost expect moving forward, knowing what we know about all of the different storylines and headwinds and an ongoing news story, that there's going to be a lot more of this where, the Bulls didn't win too many days in a row either, right? Mm-hmm. They just won bigger when they won. And to see this back and forth, now what's the general range that develops? Could be broad, right? But to see some of these back and forth situations, like a good rule of thumb in that what I'm applying moving forward is that when you see really exacerbated moves one direction or another, to zig when the market zags, I'm more likely to sell a naked put on a company out of the money today than I was 3 days ago. Because you're getting some juicier premiums. It's more attractive. It's all of those situations. If all you do now, I'm not talking to day traders or hyper-term swing traders, short-term swing traders. There's lots of money to be made for those. But from an investor, if all you do is chase candles, you're going to have a really hard time the next 9 months.
I agree with that. Yeah. And by the way, I think one of the big lessons here today, whether it's oil or the markets or whatnot, if you've learned any lessons in the last little bit, is that you have to have a plan and you have to execute that plan. That plan should include a premise and your analysis, whether it's technical, fundamental, social, whatever it is, and as well as money management. You have to know what you want to do and where. I mean, if the S&P breaks below 2,600, I think we're on our way for another leg down. But until then, I think it's a little premature to call it. Still concerned, but by the way, they're going to pass another 500 billion in PPP money just this week. They're voting on it like today, I believe. So there will be some catalysts and headlines that might calm people's nerves and get them off this oil story. We'll see how that plays itself out. I'll tell you one that it's not been has been earnings. Give me a quick peek at Coca-Cola. KO had their earnings report, and one of the most important ones, in my opinion. Basically, Mark, they did fine in Q1, but they said they're going to have a stark revenue decline in Q2. We knew that, right?
I mean, that's what we've been talking about Coca-Cola for weeks now, is that it's just not as simple as people are drinking Coke at home. I mean, Coca-Cola's revenue streams are vast. They're international. Restaurants, fast food. Like, I mean, am I drinking as much Coke as I normally do? I guess. Maybe the profit margin's right at a restaurant. Or I mean, there's just so many things on Coca-Cola in diversified revenue streams that held us back from saying, yeah, Coca-Cola, nice defensive play. and earnings today confirmed those fears. There's just good old-fashioned revenue profit problems at Coca-Cola in this environment.
Mm-hmm.
It's
That
not a
being
safety
said,
play.
you know, I like Coca-Cola at deeper levels, though. I
Oh
mean,
yeah, sure.
these
So
dividend payers, yeah, yeah, yeah.
yeah,
I
Coca-Cola's not going out of business. It's just not as profitable. It's not as attractive right now at these price levels. Now, Coca-Cola gets to $32. You know, let's have a different conversation.
Yeah, I like that, Blake. KO down, but not KO'd. That's pretty good, actually. Let's take a peek at IBM also. And both these companies, by the way, big major companies, they pulled their guidance. You're going to continue to see this theme. I mean, they had some very, very cautious things to say. They missed their revenue targets. Neither of these stocks are down big, though, like 2-3%. I mean, they're down with the market here today, but pretty much in the market pattern. Let's take a peek at Boeing if you can. You know, one really interesting report I read, Mark, and I want to get your thought on this. I don't know if you've read into this either. Boeing has changed their production over the last several years to build more fuel efficient, more costly, more expensive planes. And a lot of this was based on the idea that oil at 50 and 60 and $70, you can then go to airlines and firms and say, hey, listen, if you swap out your old planes for these new planes, eventually you'll make money on it. I read a report that was very, very concerning that if oil stays down for a long time, firms don't need these planes. They don't need new planes and they don't need fuel efficient planes. Boeing's a complete stay away, in my opinion. There's nothing about this chart that gets me interested. Maybe all the way down at like $50. But Mark, had you read that? Did you know much about Boeing's production line?
Well, yeah, and listen, I mean, airlines are selling and leasing off existing planes. There's not a demand for new planes, let alone planes. Listen, oil's going to be back at 50, $60 one day. That I guarantee as much as you can guarantee anything that you know nothing about, right? And so, will there be need for those planes one day in the future? But everything, this one day in the future, everything will be good argument. Boy, I'm getting sick of it.
Well, isn't that your argument though?
Yeah,
I mean,
at certain price levels, right? Like at certain price levels, I'm willing to take those risks. At certain price levels, I'm willing to gamble. But man, like to sit through, all right, so Boeing's profits this year are going to be abysmal, right?
Mm-hmm.
They're going to burn through cash, burn through credit. Like at what level are you willing to do that at? You know, we were looking at naked puts, yesterday on Boeing down at $50. Are you willing to do that? I mean, those are the conversations that I think intelligents have.
Those are good, thoughtful conversations. Where am I willing to take this dumpster fire of a company? For sure. You know, where am I willing to buy something that's completely going to be under pressure for quarters and quarters in a row, and we don't know when production is going to get back in line? Because do I think Boeing's going to be back in business and strong at some point in the future? I do. I think they're going to shake up their board. They're probably going to refocus on their brand image. I mean, they've already had a terrible couple of years. Boeing makes too many defense products for the government to let this company fail. It just does.
I mean, Trump, it was one of the first companies that Trump signaled out that, and I think his words were, we cannot let Boeing fail. Mm-hmm. So like when you look at the priority list, because there's going to be winners and losers. If this thing is a prolonged situation with COVID-19, if the economy's in a freaking mess for years, there are going to be winners and there are going to be losers.
But when the Treasury has to make decisions about where to send money, are they going to send it to failing oil companies that are shale producers or Boeing? Right?
Well, I mean,
oil is more important than Boeing. Yes, Boeing is important for the defense contracts and things of that we have, but oil powers everything.
But doesn't it come back? And sorry, Cody, I don't mean to cut you off.
I think they're both winners.
Cody, I want to get Cody's thought on this. Couldn't they make that same argument you just made, but only bail out the big oil companies and have that same too big to fail kind of mindset that we did with the banks in 2008-9?
They could, but I think there would be too much backlash, both political and economical, because even though the big oil producers are the ones with the major refineries that are doing it, most of the drilling and stuff that's happening, or not, maybe not mostly, but a big portion of the drilling are smaller companies that actually do the drilling. And then it gets shipped to these refineries where your large companies actually refine it into the usable product.
Mm-hmm.
You're not helping out the drillers that are pulling it out of the ground and they go under. Exxon and Chevron, yes, they may be able to purchase it, but they're not going to have the infrastructure to keep those or get those rigs back online as quickly as you would think.
It's going to be interesting. Let's move through a couple of markets, then we're going to do some rapid fire here for a few minutes. Gold real quick here, still on the pullback. It doesn't concern me personally because my thesis and my premise on gold.
Didn't you hear, Tim? The new target's 3,000.
Dude, that's not even my target. I can tell you that. I can promise you that. You ain't getting me.
Jim Rickards has been targeting like 8,000 for the past decade or two.
I mean, would I be willing to take some profit on huge rips? I'm a trader. You always have to leave some possibility on the table to rebalance portfolios and things like that. Am I going to capitulate over fear and massive selling? I can't imagine it. I can't. Gold is an investment thesis for me, and it's a hedge against the madness that is happening through the modern monetary programs and all of this new corporate socialism we live in 2020, quite frankly. So I love any pullback in gold. Do anybody want to have another take on that?
The lower gold goes, the more attractive it becomes. I mean, it is the simplest equation in this market out of everything. Bank of America isn't exactly a gold bug, right?
No,
I think they have said derogatory things about gold ownership in the past.
because it doesn't pay a dividend. The Wall Street guys are changing their tune right now, aren't they? The old guys who used to throw gold under the bus all the time, Noah, they're now saying, hey, look at gold. Because it feels
well,
like,
I mean, the old guys are just like gold is money. Everything else
Right.
is not. So there's those guys that are going to, always be gold bugs. But I think that search for return, that search for ROI is one of the reasons you get people poo-pooing gold.
and safety, right?
Yeah.
I mean, people want to be in something.
But Bank of America doesn't even say the ROI. They're saying ROI is going to be massive.
Well, that's a speculation on direction, right? It's not a dividend paying asset. It's not nor like a growth stock type of thing. It requires the massive printing of money for that asset to rip, right?
Mm-hmm.
I mean, here's the thing about a balanced portfolio, right? Here's the thing about allocation. Like, I've been talking recently about having up to 25% of my own portfolio in gold. Something that I'm constantly reevaluating. The percentage you put in gold, like when you have a diversified portfolio and gold, silver, equities, oil, natural gas, whatever that balance is, when a smaller percent of your portfolio gets slapped in the face, like a day-to-day, like on oil, but you feel great about this other aspects of your portfolio, life's still good. The only short-term risk to gold, and we saw this a few weeks ago, right? The market has a spaz out moment. It can take gold down with it because of forced selling, margin calls, all that. Do you think everybody solved their margin calls a few weeks ago and it suddenly became responsible?
No.
Probably not. Probably not.
No, I
Well, actually, they doubled down with the thought of, oh, it's going to come back eventually. Let me just add to my position down here and increase the risk.
No, short-term volatility. I mean, it can happen in any of these products for sure. There's no question about it. Give me a quick peek of the dollar, Cody. Little bit of a pop in USD. If we can get a breakout there, Cody, the dollar finally can get out of this range. I mean, we were so neutral on it for the last couple of weeks because it just didn't feel like it was going anywhere. But now it's almost like it wants to break up above that triangle.
Yep.
What's your read on the currency market right now?
It's still neutral, leaning bullish like we've been for quite some time. It's been on the 40-yard line, so we're leaning slightly bullish. Just like we said, I think it was Friday when we talked about it, I want to not only see the breakout, but I want to see it break out and then come back and retest that 100 level. And then I'll really get bullish for the dollar to continue up, to that 102, 103 level that it could possibly be at. That's when I'm really looking to do a swing trade right now. Just watching. Watching. Be patient.
I like it. Guys, many companies I want to talk about here, but like we always do on Tuesdays, I do want to play some rapid fire. And if you know our show and you've been here long enough, you know what rapid fire is. Pop a stock in the chat. We go through them. We got 4 analysts here. We're going to keep this pace pretty quick. And nothing off the table here. We can take a peek at anything you got. Start with AT&T from David Salabos. Let's go left to right. I'll take the first one. Dividend payer, much like Coca-Cola. Is that earnings tomorrow after the bell, Cody? Let me look here. When does AT&T report? Highlight
It's
that.
the 22nd.
22B. So tomorrow
Yep.
morning. Let's wait to see earnings. Let's wait to see earnings. I'm interested in some of
Wait,
these
I
safety
thought we were gonna
dividend
prep
plays.
weren't we gonna prep an earnings play on
We can do it on Netflix. Yep.
Netflix? Yeah.
We'll get to it after the rapid fire. I'll show people how to do it real quick. Let's do Pepsi. Mark next with Pepsi. Coca-Cola we talked about. I think that bleeds into Pepsi as well.
No, of course it does. No,
Yep.
I mean, they're just better. I mean, if you're looking for defensive plays, go look at Abbott, go look at Johnson Johnson, companies that have shown that they're going to do well in this environment. I just have zero interest.
Noah next, work. This
Well,
should be
this
on
is-
everybody's watch list.
This is one of our watch list stocks from the stock report this week. And I still like the breakout above 30. I really do. Take out that 30, and I think you got a pretty good bullish pattern set up.
Mm-hmm. SYY. And Cody, what you seeing there? Little triangle.
Yeah, symmetrical wedge. I want to see where it breaks. I mean, it's
Mm-hmm.
got an easy ceiling right there, about $50. But because we have those 3 wicks, it's hard to know whether or not it's just going to wick up again, or if you play the more conservative part where you actually play above those wicks, you might miss out on some gains. 200s on it or 50s on its way down, so it might hit its head right on the 50. Quick in and out, maybe if you're played to the bullish side. Other than that, there's better plays.
Yeah. Let's do Tesla next. I'll take this one. Oh, the Wall Street bet kids. They love Tesla. The FOMO rallies and the kids who just love going all in on long calls at like the 2000 strike. I don't know how to read this one because it makes no sense to me, but that's an uptrend. It's got some air to the upside. If you are a bull, you're probably happy and liking this little hesitation flag. There's too much risk. $100,000 car in a market where there's competition and consumption issues and all that kind of stuff. I still can't wrap my head around why people are running into Tesla, but it is bullish in the short term.
Is anyone considering, like right now, real life question, because car deals are really, really good right now, right? People, zero interest down if you have good credit, all kinds of deals, below manufacturing costs, people begging you to buy their car. Anybody going out looking for a new car?
No.
I was thinking about it.
I mean, I've been thinking about it, right?
I did see, I don't remember what dealer it was, but it was like no payments for 90 days and 0% APR for 3 years. And I was like, you
I've
really
seen
are
like
almost
80 months at 0%, and
Yeah,
we'll
it's
cover
like-
you
it's like you
for up
really
to
are
6
giving
months
that
if you
car
don't have a
away.
pay. Yeah.
I mean, I have an older 2012 car. I'm not exactly, I'll drive a car for a long time, but I've been thinking about an upgrade anyways. And so it's like, but you still hesitate, right? Even with all these deals. Now imagine that car's $100,000, $80,000.
Yeah.
Not a chance.
Yeah. And you just lost half of your income and there's uncertainty. Even if you love Tesla, don't you wait? I mean, that's my thing with Tesla. The short-term risk to me, I just don't get it, but you got to admit it's bullish. I mean, the bulls who love Tesla, they love it the whole way. I cannot deny that. And they are running this thing. We're back at 700.
Listen, the bulls that loved Beyond Meat once upon a time loved Beyond Meat too.
Give me a peek at Beyond Meat real quick. I did see a report that they are trying to put some of their product into the Chinese markets, blend it in and all that kind of stuff.
I'll tell you what I've noticed, Tim, is as people picked over grocery stores, there was a lot of those not true meat products left.
They did not go.
I noticed that too. They were still sitting on the shelves. It's like, oh, all right.
Yeah.
That just tells you that people would rather starve than eat. Maybe
I got nothing against their product. I don't know if it's good or not, but I know people who swear by it. They love it. The valuation, these debt-driven companies that recently IPO'd, aren't there easier plays ahead, guys, than paying for expensive food companies that haven't proven earnings? The silence is deafening. That's I don't think nobody wants to argue with me on that. But I mean, there's a trend there. There's no doubt about it. Give me Newmont Mining, Mark. Let's give this one to you. Mining ETFs, man. This one's been ripping.
I mean, once again, like Bank of America's price target was not 3,000 one day. If I'm reading this right, it was an 18-month price target.
Mm-hmm.
Like, even a person who's naked put out of the money You know, I love those plays. There's nothing I feel better about. Probably will sell another one today. Have naked puts on GLD. Like, how do you just not want to just increase your position with gold more and more? You know, and I'm like a heavy, like 25% portfolio. That's no small amount, right? Like, that's not a small amount. Like, gosh, but how do I not want to just buy gold outright? And how you choose to do it, whether it's miners, paper asset, it's just, boy, it's
No,
cold.
the miners have been making a comeback recently. There's no doubt.
Well, you got to think that the demand for new gold is going to be increased because you do have some. I mean, it's tentative at best whether or not you can get your hands on physical. The mints are all back ordered, right, for however long months. And I think that just the speculation on the demand alone is what's driving this.
Yep. All right. No, I'm going to give you about 4 in a row, just real quickly. Give me DocuSign. We've already looked at AT&T and Work, David.
I like the pullback on Docu. Maybe needs a day or two more down, but it's a decent pullback. Next.
Well, and this is this new stay-at-home, new economy kind of play, right? I mean, it's been on so many watch lists we've had in our reports. AMD, Noah, I'm going to stay with you for a few minutes. For a minute. AMD,
little bit of an increase in selling. I'd like to see that back down in the 50 ballpark.
OLLI from Keith Seiler down there in Florida. Keith, I hear they're reopening the beaches. Are you going to be heading out to the beach here anytime soon? I'd be curious. What are you seeing here? OLLI.
Well, this one here, as far as like it's an old support resistance zone down there at 60, it's got that 200 period moving average. I would like to see it cross back above the 200 period moving average for a bullish thesis on that.
What is Ollie's? I've never shopped at an Ollie's bargain outlet. I know
kind of like a TJ Maxx, isn't it? Like a discount,
like on the East Coast.
Yeah,
East Coast bargain shopping. Interesting. Gilead. Back to Mark for a minute, then I'm going to switch to you, Cody. Gilead Sciences, GILD.
No,
Mark, that gap is not holding, is it?
Well, it's because the euphoria over the thing was nonsensical. And, you know, people realized that Remdesivir, how do you pronounce it? Remdesivir, it was all BS. I mean, it was a limited trial that Gilead immediately threw cold water on. You know,
that was the other thing is that, yeah, it was leaked by someone else that Gilead was doing it. And that's why Gilead threw cold water on, like, whoa, we've said nothing. We're still just running the trial.
You know, so like typical pharmaceutical play right now, if you can get it back, like pharmaceuticals not the worst play in the world, right? But like chasing the dragon on rumors, well, this isn't the last time you're going to see this. Somebody did something, stock jumps up and then immediately sells off when reality sets in. I mean, if Gilead can ever come back down to, and it's like with any, insert Pfizer, insert Merck, insert Bristol Myers, insert any of these companies here. If you're looking for safe plays when they get back within range or near the lower end of the range, I'm interested. But chasing these things, no. I mean, you're probably going to see this slide a little further.
Yeah, pull back into the range, though. I'd be interested at least somewhere in there, maybe. But that gap out was ridiculous. So when it happened, Mark, that's what gapped the markets on Friday. And look, I mean, now where's the euphoria now? SLV, Mark, silver. I know you run our commodity report every weekend. Silver's been an area that you've been very interested in. In fact, I think you've even said I like silver more than the stock market. You know, what's your read on silver here?
Not like, listen, I'm not going to make the mistake I did last time. Last time silver sold off, you know, so many things were going off in the sell-off, right? Like you didn't have enough hours in the day to do concrete situations across the board. Silver drops, I'm picking it up. I have naked puts on SLV, full disclosure. And if it falls down to those levels, I will start building a silver position.
Over to actually Cody stepped up. We'll come to him in just a minute. We're going to do Netflix last here in about 5 minutes, wrap our show up at about 10 till. We've got a few more minutes here. I love rapid fire. So hopefully you guys are enjoying it as well out there. Southern, no, I'm going to give you 3 or 4 in a row. SO, actually, I'll take 3 or 4 in a row. Stuck in the mud there. You got earnings coming up. It's a nothing. Looks like a market performer in my opinion. KHC, Kraft Heinz. Interesting idea here. Obviously, demand for products like this is going to be going up. People are going to grocery stores. It's had a nice little rally, a little reversal pattern there. Obviously, earnings in a couple of weeks, but Kraft with a dividend. I mean, I would at least consider putting on a watch list like those Coca-Colas and AT&Ts. Darden Restaurants, DRI. I think the fallout on restaurants is going to be more than historic. I don't think we have any idea when people are going to go fill those restaurants again. I've heard anecdotal evidence that takeout orders have been holding some of these places afloat, but there's nothing that would get me into a long Darden position, Mark. I mean, there's just nothing there for me personally. Is there any case for the restaurant industry in general, specifically Darden? Can either of you make one?
Nope.
Bearish one.
No, my preferred play in restaurants is Wendy's. And once it not
Maybe a
getting out of
McDonald's.
I don't know. I think the evaluation and I can't use naked puts on McDonald's because I don't want it to represent that big a percentage of my portfolio.
Okay.
Wendy's, I can, but like fast food itself, yeah, fast food I can see even in a COVID-19 world,
People gotta
holding
eat
its own,
cheap food.
you know.
Yeah.
But like, I mean, yes, restaurants are going to open up in Georgia. It will be fascinating to see. Restaurants on Monday will open up in Georgia. I
Mhm.
mean, I want to see, you know, how many people are going, right?
Mhm.
Like, what is consumer behavior?
And we're not going to get to all these here today, guys, but we'll get to as many as I can. TNK real quick here, Noah. I'm going to have you take the next couple.
TK Tankers. I am not familiar with this company. Looks like a pretty cup and handle breakout just from a technical perspective, but I don't know the first thing about the company. I'd need to do
Price action to me indicates they're getting paid some really big fees to store some oil.
That's
well, that's what I saw, like up to negative $40 a barrel.
Like, and so like if you want a reverse oil play, you know, like, you know,
that's
Interesting.
it. I'd want to see I'd like to see how where the revenue comes from and stuff like that. Like try to understand the company a little bit better. But I think,
and I'll have something prepped for the coaches show tonight. This kind of arbitrage, weird TK oil tanker USO play.
Cody, I'm giving you 5. I see you're back here, young man. Let's do X, US Steel. Popular company for cash flow over the years. Obviously an interesting one. Cody.
That's exactly where I would place it. I mean, this thing's been on just a slow sideways, slightly bearish downtrend for quite some time. Best way to play this is to aggressively manage covered calls. If you want some sort of boomerang trade on this after earnings, you could probably sell some things down at $3. Pick it up at a low price like that. You could easily boomerang this company.
Walmart, Alcoa, then Bank of America, Noah, in that order. Let's speed this one up here, Code.
Walmart obviously had its pop from all of the consumer staples that it's been lately. It's kind of forming a very ugly high base. I want to see it consolidate a little bit longer and then a break above that that high at 133.38. Probably do 133, maybe 52 or so is probably where I put a trigger to get in. And then you can play it to the upside.
By the way, Oppenheimer raised their price target at 145 on Walmart. Alcoa next, then Bank of America. Cody, staying with you.
Alcoa, this is a what is a U.S. aluminum.
Earnings are like tomorrow, aren't they?
Yeah. If you wanted to play this thing for earnings, it's a small company. You're probably not going to make much. The volatility on this isn't going to do what you expect. It's not really going to move. You could use that to your advantage. There are other companies play earnings.
I'm going to get nostalgic here for a minute. I remember when I started trading, Alcoa was one of the most important companies to watch their earnings on, Mark. They have fallen.
Oh, back in the day, Alcoa was the kickoff of earnings season.
All the time. Yeah, Alcoa reporting. I mean, that was the unofficial start to earnings. Bank of America, BAC, the big banks here. Cody, last one for you.
It's hard to play Bank of America right now. Look how choppy that thing is. I pass. Just straight up pass.
I'm interested in the banks, but I think it's a complex thing. The bank earnings last week were terrible, but they've got all this new government money and all the different fees. I mean, they're just going to pass another 500 billion today. You know, that's like about 2%. That's another 10 billion bank profits.
Run out of money, someone just hands you more. Like how nice would that be that if you just trade and spend all this money and take all these risks, and if you run out, someone just hands you more money. How nice is that?
And Hero, I know you love Tesla's Cybertruck. I'm just seeing your comment now. If you buy one, I'll come camping with you and breed my old Ford. Okay. That's what we'll do. And I will not judge you. I will be impressed with it. There's no doubt about it.
I saw a video, Tim, of the Tesla Cybertruck pulling the old Ford.
Yeah. Yeah. One more here, guys. Oh, is that right? They were pulling.
Have you seen that video?
It
It was like a Ford F-150 or something like that.
And afterwards, everyone was ripping that video because they were like, they let the Tesla get going first, so it's almost impossible for any vehicle to then grab traction. Like they'd set that thing so against the Ford. And I'm not a Ford fan, honestly. Like I'm more of a Dodge or a Chevy person myself, but yeah, Tesla rigged that against Ford.
Of course they did. Of course they did. Last one, Mark. Wynn Casinos. There's a lot of anticipation the casinos are going to be popping because they're reopening here in May in Vegas and whatnot. I think that's really premature, quite frankly. What's your read here, Mark?
Listen, I'm interested in casinos like I'm interested in a lot of things at much, much lower prices. But in the line of fire companies, like companies that you're just not going to see consumer behavior levels at where they were before. I mean, I have to get a big discount to be interested in it.
Well, and I did promise the guys that we would be doing a Netflix setup here today. I don't like doing a lot of trade prep on the halftime show. We do that in our other shows, obviously, when we have more like a one-on-many format in our traders lounges and things. But I did make that promise. Want to fulfill it. Give me the trade tab if you can, real quick here, Noah. 433 on the price.
So what you're saying right now to everyone out there watching is this is a sneak peek to what happens in all of our pro shows that premium members get access to.
Yeah, I didn't say that very clearly, so thank you. I do appreciate it. I'm not being sarcastic for you clarifying that because I don't always say that very clearly.
Oh yeah, every time we're trying to say, guys, come to the coaches show, come to the cash flow club, come to the lounge. What you're about to get right here are the actual breakdowns of, hey, buy this, sell this, this way. The detailed number teaching that our pro members get that you don't get here on YouTube.
Yep. Give me the trade tab. Give me the 10-day option if you can here, Noah. And there's a lot of different expirations you can use it. By the end here, Noah, I'll want you to go to the website, show people the playbook for the inverted fly. I have not prepped this yet because I don't usually do my volatility prep till after the halftime show. So this is how I would do the preparation to start the process here. We're at 432.50. There's not a 432 strike. Look at volatility. Let's assume the skew is downward. Let's do 430. We've got a 63 no, 47 MMM. I want to do a 25-point window, Noah. So do the 430, 405, 455 inverted fly if you can. Let me see what the price is.
Repeat those numbers one more time.
Just right click on the 430.
Okay. You're talking calls or puts?
We'll look at the put side.
Okay.
We'll look at the put side. And do a sell butterfly and change the 435 short contract and move that all the way up to 455. We're doing a 25-point window. Half of the market maker expectation is the way I always start these. And on the downside from 425, go to 405.
All right. So now we got it set up. Tim, why did you want those numbers?
I want to create a scenario where even just an average gap is going to put me in profitability. Give me a risk profile here and flip it from call to put just in the order form itself if you can. I don't know if you can still do that down here where it says puts. Let me look at the credits on both sides.
Oh, hold on.
Unlock it. Yeah.
A little bit more on the puts, couple pennies more on the puts.
And spread is a spread. I mean, people get confused about this. I mean, you can do a vertical call or put spread, or you can do a butterfly on puts or calls. Here's a scenario where it would be like a one-day trade. And so that blue line doesn't really matter up there. The theoretical loss down at the bottom part of the pivot is if you hold it till expiration. If the theory behind an inverted fly is that you're just playing earnings, you're going to be out tomorrow or Thursday, most likely, maybe 1 or 2 days. These are not long-term plays. It's all a pure volatility play. So the idea here, change the line if you can, up on the top where it says 1 at expiration, change that to single if you can. That's our play. and you're going to get some volatility crush out of this thing. You're getting $3 credit on 2,200 in margin. Account size for a play like this. What is our risk if it does nothing tomorrow, Noah?
If it does nothing tomorrow, it depends on what kind
Literally
of
nothing.
volatility, like what kind of volatility crush you get. But
You're going to get a ton of it.
Yeah.
Give me a vol adjustment down here if you can.
We can do vol step and what you want to do, like minus.
Do negative 10 so we can see the extreme.
Let's say it really crushes. Yeah.
Yeah.
There's 5% increments on that with a couple slices. So if you got a
negative 10.
Negative 10.
In a market like this, I want to map out worst case scenario on everything we do. I mean, it's just the market we're in. So you probably have 100, maybe 150 bucks with slippage on the contracts, maybe a couple $100 risk. If you get your 40-point gap up or down, you're probably going to make that. So you've got an even play here. You know, it's an even 150 up, 150 down. And that's if it goes nowhere, you get no vol crush. Now, Mark, this is an advanced play. I rushed through it, quite frankly. To execute something like this, you got to be a pretty decent intermediate to veteran trader, don't you think? Just for fill prices alone and all that kind of stuff.
Yeah.
Noah, can you do me a favor?
Yeah.
When are you teaching lounge this week?
Oh, I did one this morning, and I don't know what my schedule is. We still have to wrestle over who gets to do it. So
the next time you teach lounge, can you do an inverted fly and kind of walk people through them?
Do you want to teach it on Thursday?
I can certainly do that. That'll be fun.
We'll be on the lounge on Thursday.
Here's what we'll do, guys.
So, pro members, guys, Thursday Lounge, which is the show right before this one, Noah's going to teach this strategy in greater detail.
And give me the website real quick here, Noah. Those of you who are already pro members, I'll give you a little homework to get ready for Noah's Lounge. Highlight the Trade Center, go to the playbook, which is one of my favorite additions to our website in the last few years. I really am proud of this playbook. Come down to the Vega playbook. So you got Delta, you got Theta. This is a Vega play, that inverted butterfly call spread. There's a video, there's a PDF, and a little write-up on how you would build those things, okay? And definitely go and review that before, if you know that you want to add some strategies to your arsenal. In my personal opinion, in a market like this, why wouldn't you consider volatility trading? Learn these techniques. Now, how you execute them, got to get your skills up. I heard crude oil went down pretty hard here recently, guys. Just the last like 2 minutes. We hit $6 on the June.
Oh, USO's down at 230.
No.
This is some crazy times we're seeing right now. And this is, I mean, most people don't understand that in the futures contracts and in the ETF of USO, that these are constantly being rolled forward, and every single month matters. And when the expirations of each month happens before it's rolled to the next month matters. So seeing the things that we're now with the negative prices and whether or not the June is going to go there, if you're not sure what that means, you need to be listening to Mark's commodity report. Because every single commodity has this future rolling aspect of every single contract. You need to understand that in order to understand what is going on right now with oil.
No.
And here's one thing I would ask everybody out there, and then Mark, I'm going to give you the last word, because this is something you study more than anything, quite frankly. But if you see misinformation online in your social communities, be polite, but let them know that just because oil was negative in May and crashing in June does not mean we have the end of economics. This is a short-term problem that can become a very real long-term problem. But do not, I mean, you're informed out there. You're watching this show every day. You're getting education on this. And I think the public fear is one of the biggest risks to anything, quite frankly. That's why they say don't call fire in a crowded theater, Mark. Mark, last thoughts on this oil situation?
No, I mean, we're going to talk a lot more about it on the Coaches Show. I mean, oil companies looking a lot more favorable, and that's saying it slightly until we get total clarity on USO on what they're doing. They might not be doing anything today. If they're not doing anything today, if June prices go severely negative in the short term, there's big problems. There's a lot of gamble going on right now. Every day is going to provide insane clarity on new potential entry points. But as of today, I mean, just realize that if you sell a naked put at $1 or sell a naked put on 50 cents on USO, be willing to lose that money. Now, is the risk worth the reward? But realize the loss on that can be total. Are you willing to lose? I mean, what are those 50 cent? Go to USO as the final thought.
USO.
And give me the option tabs. Give me those May 50 cents.
Which May?
May
24
15th.
day.
24 day.
Yeah, I mean, loss could be total. Are you willing to gamble on that?
But you're taking a $36 risk per contract, basically saying, I don't believe the biggest oil ETF in the world is going to go bankrupt.
And yet it could go bankrupt as early as tomorrow.
We don't know. It absolutely could.
I mean, that's the damnable thing about this right now is we saw yesterday. Yesterday was unprecedented on what can happen. Literally unprecedented, not using hyperbole there, in seeing the negative oil prices that we did in the price action. Obviously, the markets are at a level of volatility that we've never seen before.
Mm-hmm.
Like downward pressure and a spiraling thing on the June contracts. If USO hasn't rolled some of those out already, it could cause a catastrophic event in oil. Rolling them over to XLE, taking losses on naked puts if you're not willing, your risk tolerance, taking a loss. Realize that your level of gamble on USO has literally never been higher. Now, I'm staying put because I'm willing to lose the money on my naked puts.
Can I point out that we have a zombie back from the dead in the chat?
I saw
here?
Matt just pop in. Everybody, Matt.
Everyone's been asking where Matt's been for the past 3 weeks. And I mean, he's back from the dead, I guess. I mean, he was deathly sick, not the
Matt's
Rona.
coming back soon. He's
Not the Rona.
Oh, he's just been busy testing out a new strain of something or other. He'll be back.
He's being an amateur scientist out there. Matt Justice sighting, exactly.
Yeah. Now, Matt was on our podcast yesterday. If you haven't had a chance to listen to that, tradingjustice.com, you can go get the podcast. And we talked about all this oil stuff, so make sure you check out the podcast. In fact, I'm going to drop the link to the website. And then we'll welcome Matt back on the halftime show. I think he's going to try to get back tomorrow, but we'll go from there.
Love it.
So, all right, guys, great job today, everybody. I know these are very interesting times. Trade, with your plan your trade, and make sure you're doing your money management. There's no question about it. That's true in all markets, but it's a good reminder right now. We will see everybody tomorrow. Make sure you like, share, subscribe, and click the bell to our channel so you can join us each and every day. We'll see you there tomorrow, guys.